What shit? Okay. What? Restring. What? Hold on. Stream cut off. Set up a live stream. Okay. I think we're live right now. So let's just give a few more minutes. So we can wait for our audience. Hi, everyone. Thank you so much for joining our webinar section today. We're super excited to have you guys today and could host this conversation alongside a very great trader who has taken the time to give us his valuable trading insights. We will
네.
Okay. Hi. Hi, everyone. Thank you so much for joining our webinar section today. We're super excited to have you as our guest today, and so we could share the conversation alongside a great speaker from our partner, who will take the time to give us the tutorial of how to do the option tradings. We will kick off today by introducing option product of BMAX. As you guys know, BMAX is a derivative exchange. We offer perpetual and also options. For those people who not really familiar with option tradings, so I will just kind of jump in really quick. Option trading is the act of buying and selling options. They're contracts that give the holder the right but not the obligation to buy or sell on the underlying asset at a certain price, if it move beyond the price within a set of time frame. So yeah, that's like the basic understanding about option. But we'll cover more in our follow-up sections. But later we will also discuss current market condition, including the price prediction for Ethereum. And our guest speaker, Bernd, will also pitching our ideas, how to do option tradings, and also the tips how to do so. So all the user, after learning the option trading, they can maximize your profit in the current situation for Ethereum. By the way, right now we're giving away $50 to two people. Total that'll be $100 for all of us, the audience who joined the conversation. Also give us the questions. Yeah. So right now I have the Bernd as to make an introduction of yourself. Yeah, Bernd, please introduce yourself.
Yes, hi everyone. Thanks, Skylar, for the intro, and thanks everyone for joining. So yeah, I look after sales and business development at PowerTrade. It's a really great pleasure, and that we partner up with BitMEX to power their option products and collaborate on this, as the option space is obviously still very nascent. So yeah, I've been at PowerTrade for 2 years, and previously was about 15 years in TradFi in various trading roles across fixed income and commodities with a focus on options. So I think today what our goal here is to give you a brief overview of the BitMEX UI, how to kind of maneuver around it, how to place trades, and then given that we're focusing on ETH going to $5,000 as the theme of the webinar, we're also going to have a look at what potential trades could be put on. Again, nothing will be discussed today is any sort of investment advice, but it's more to show you how you could think about options, especially if you're currently trading perps. These are obviously new products for you, but we'll try to make it as easy as possible for you guys to understand. And feel free to drop any questions into the chat, and then we can answer them towards the end of the session. Thank you.
Yeah, thank you. Yeah, today we mostly will be teaching people how to do the option trading, and also Bernd will also give us some tips of how to do the option trading and what is the best strategy for us as a beginner. Yeah, so as right now we can see is our trading product UI. So I'll let Bernd to take over and give us like introduction how to use it, because it might look a little bit like complicated, but after we get familiar with it, that's fine. Yeah.
Yeah, for sure. Thanks, Skylar. So we'll have a look here. So I think anybody who is already, maybe to mention, a BitMEX customer, either trading perps or just signed up recently, you will see this options new tab on the top here, top left. If you clicked it the first time, there's some terms and conditions to accept. So we have an account here where we've already done this. And then the next option will be to fund your account. And what's nice here is that you can just transfer funds if you have them already in your existing perpetual account on BitMEX. And you're able to deposit directly into your options account. Now, if we run through, so today we're focusing only on ETH options, but there's a number of other option markets available. We recently added liquidity for Doge, Solana, and BNB as well. But as we said today, we'll focus on Ethereum. So then the first thing you will see here, as opposed to a perp display, perpetual market display, you'll see there's a number of different order books here. And they're all basically, you can switch around between those order books by clicking on the different dates here. So with an option, you have a few more parameters than what you have with a perpetual. A perpetual never expires, but an option has an expiration date, which are those dates which you can see here on the top. So you can toggle around. We're looking at the 28th of June expiration now, but you can go all the way out to the 28th of March, or you could also go back to the 31st of May, which is obviously an option that expires in about 20 hours. Then the next parameter that you have to look at is the strike. So with an option, and if we focus today, we have a sort of more bullish focused webinar on ETH. Let's focus on calls. So a call option gives you the right, but not the obligation to buy Ethereum at a certain date, which is the expiration date, at a set price, which is the strike price. So if we look at one example, if you say the $4,000 call for the 20th of June, you could buy one option here at $84.1. That would mean that on that date, obviously, if Ethereum is above 4,000 plus the premium costs, then you're able to buy Ethereum at 4,000. So if it's at 4,001, you have the right to buy it at 4,000 on the expiration date. So that's how you have to kind of think about those different parameters. Then our options are expressed in dollars that we just seen. So one option here is $184. You can actually fractionalize it as opposed to TradFi. You're able to do this in crypto, so you can start very small. I always say if you're new to options, start trading the minimum sizes to get comfortable and experience the platform. You will see here at the bottom a few other tabs. So you'll just have the order book display. There will be more order book levels being added as we get more liquidity. You have a payoff chart, which I think is also useful for beginners. So we currently, it shows you where the Ethereum price is here with this vertical line. And then you can see the green area indicates when you're making money on the option. And the red area is basically where you, basically your P&L is negative. And then you can see recent trades here as well that were recently done. So I think in terms of, let's say we would place an option, maybe this one is actually not bullish enough, so we can actually say, okay, we'll do an option that ETH goes to $5,000 or above by 20th of June. So let's do the minimum size here. So that option will cost us $3.24. I'll go buy to open. You will see as well your margin health after the trades, and you will see your just a trade summary as well. So let's place an order here. You can see the order has been 100% filled. Now this drops here in below, and what you will notice is that when you buy an option, the cost of the option is immediately deducted from your balance. So you're paying a dollar amount up front, and this dollar amount that you spend. So in this case, we spent those $3.24. That is also your maximum loss on the trade. So as opposed to perpetuals, where you enter position and you potentially have a sizable P&L loss on a trade, with options, this is the maximum loss I can lose. And as we saw from the payoff chart, I've basically what happened here is sorry, let me remove that. You can see here that that red area is always the same value because that's the premium which is spent. And then once we get above 5,000 plus the premium that we spent, then you'll see there's an unlimited profit zone. So that's actually a nice, if you think about it from a risk reward perspective, a nice product to trade, because I know I cannot lose more than 3.24. But if Ethereum goes to 6,000 by the end of the month, I'm making $1,000 on that trade. So it gives you a lot more leverage, but it's a more it's actually a safer product if you buy options. And I think for today's purpose, let's focus on buying options. I think that's a safer way for anybody who's starting out in options to get involved here. So I think those are kind of the main items here in terms of the UI. Obviously, there's other other values you could add here, like delta, gamma, which are Greeks, which I think we'll do on a separate webinar because they're quite a bit more complicated to understand. So I don't know if there's any questions. Feel free to drop them in the chat. Otherwise, Skylar, maybe back to you for the next steps on your end.
Yeah, thank you. We have a guest on Twitter is asking, can we actually close the deal, the position before it expires?
Very good question. So our options are European, which in fact any option you can close before. So basically, we can just go in now, and I'm actually just going to do this. I'm just going to sell this option back at the bid. So we bought 5,000. Yeah. So we just sold the option. We took the 30 cents times 0.1, so 3-cent loss here. And as you can see, there's actually a lot of size here. 1,000 options you could sell if you had a big position.
Yeah.
So yeah, you can buy and sell at any point in time. These basically function like a regular order book in perps. Just the difference is that there's not 100 order book levels, So at the moment we have 2, but there's more liquidity coming. So it also doesn't flash maybe as much as perp traders see it. I mean, you can see on the right hand side there's always updates. You probably see a lot more action on the shorter dated time zones expirations, but yeah, basically here it updates maybe less frequently, but that doesn't mean you cannot close. So as long as there's a bid and offer, you can always buy and sell.
Yeah, so basically, what you're saying, option allow us to like buy a contract that we can actually, like, for example, the contract ends day is like the end of June, but we can actually cash out before that as well, right?
Yes.
Okay, but
yes.
like what about the afterwards?
So what will happen? Let's say you bought this option, and let's say ETH goes to 5,100 by the 20th of June. And also worth to mention, the expiration time of this option is always 0800 UTC, so across any expiration. So at that time, the settlement price will be 5,100. So you bought 0.1 options there. How do you work on your P&L, right? That's always the critical question. That's basically what everybody cares about. So you basically can see here, if I go to 5,100, close to that, you can see it's you'll make if you buy one option, you make about $66 net P&L. From the settlement side, what will happen is it's the settlement price 5,100 minus 5,000, so that would be $100 for one ETH option, but you bought 0.1, so that's obviously 100 times 0.1. You would make $10. That's what the money you will get into your account on the settlement date in USDC. It will auto exercise, so there's nothing to do. It's almost like a take profit order. You'll automatically take a profit. And then obviously initially you spend 3.24 to buy the option. So your net P&L of the trade is 10 minus 3.24. So that's basically if you hold it till expiration. But if before the option you buy it at 32.4, it goes to 50, yeah, just sell it if you want to take a profit. Which is another thing with options, as you will get more acquainted with them and start trading more frequently. Some of these options can provide substantial percentage returns. One example would be, before the rally from Ethereum from 3,000 upwards to almost 4,000, there were some options like 3,500 and higher strikes literally trading for $1 when ETH was at 3,000, and when it went to 3,800, 3,900, you would have made probably 3,000 to 4,000% profit. So basically 30 to 40 times your investment, which happened in a matter of a few days. So as we see here, and I always will encourage you to always look at the payoff chart as kind of a routine when you trade an option when you start. There's unlimited potential here, right? And who knows, maybe it trades to 6,000 in 2 months. Given what we've seen in the recent rally, who knows, right? It can move very, very fast. And that's where options allow you to get that leverage with that limited loss potential. Let's say the option expires exactly at 5,000. Very unlucky. You're not going to make any money. You spend 3.24 on that 0.1 option. If it goes to 3,000, you don't care. You lost $3.24. If it goes to 0, you don't care. You long the call and you spend your premium here. So that's why you can actually have a, it's a more diligent tool to trade, I think, in terms of risk management. In addition as well, there's no funding charges. There's no liquidation as well. So you cannot get liquidated out of this position. If you just have this position in your portfolio, it's impossible because you've already spent the premium.
Yeah. So basically this one doesn't have any leverage, right?
Well, I would say the leverage, you could almost say it's it's kind of the relationship. You're paying a fraction. So you're paying basically $3.24 to have a an exposure of 0.1 Ethereum. Right. So it's actually, if you do that, it's 500 divided by 32, it's about 15x. If you view it that way. It depends how people look at it. But yeah, there's always an implied leverage because, as we've seen, the returns can obviously be quite outsized for the exposure that you're taking.
All right, cool. So we got a question from a Twitter account, the Pasta Eater. He's asking, when there's no immediate liquidity and we're requesting quote, where is that liquidity coming from? And why is that not displayed on the order book?
Okay, so if the question is related to the order books, there's always liquidity, as you can see. Maybe the user is asking about the RFQ screen. If so, that's correct. At the moment, there's no auto quoting, but that will happen in the next week or so. So you're right. If I wanted to do the same trade here, I'm just going to show it. That's our interface for RFQ. So we buy the $5,000 call here. I can set up exactly the same trade here, and I could do 0.1. Right now, the liquidity for single legs actually comes. So that liquidity is getting pulled in. But if you're looking to do a different trade, if you're looking to do a call spread, then that doesn't have any auto quoting right now, but that's being added. So actually for multi-legs, this is going to be a very nice tool where in a few days there will be a two-way market, and you can then execute actually a multi-leg strategy, which we'll get to a bit later. So I'm not sure if that answered the question. Please let us know. But I think there's always liquidity in the order books if you go here.
Yeah. Okay. The other user is asking, are there any funding charges like with perpetual for option?
No, not at all. So that's the other advantage. If you think about it, I can buy a December call option. I'll spend my premium, and I don't get any funding till December or ever, right? So if I want to be bullish ETH with a perp until 27th of December, I might get killed on the funding, So that's a nice thing. So maybe the key points are, if you buy options, no liquidation risk, no funding charges, and you have a limited risk, which is limited to the premium that you pay. So very attractive. And I think for especially perp traders who are active in perps should look at trying options. So instead of going long ETH perps, maybe buy a call option and see how it performs.
Awesome. Thank you. So yeah, today the topic is around the Ethereum. Since right now we all aware Ethereum has been approved by the SEC, they approved the first draft of the paper. Right now they're just waiting for another two kind of legal document to get approved. So a lot of people been speculating, thinking after everything is approved by maybe July or maybe August, as like the ETF of Ethereum ETF will be passed. By the time it's very likely the Ethereum price will go up. Like this time it actually went at 1,000. So yeah, so what's your thoughts on that? Like, what do you see Ethereum price gonna go in next few months? Berm, can you answer?
Yeah, sorry, I was on mute. Yeah. So I think, obviously we've seen a very positive price development, very sharp rally as the market was clearly not counting on an ETF approval this month. I think some smarter players, what we've heard is actually traded some options a while back to potentially participate on such an outcome. And I think, yeah, I mean, very hard, I guess, to comment on where ETH goes right now. But what I would say is, or maybe we can look at certain ways to how we could participate in various scenarios. So as you've seen with options, you have a lot of flexibility how to structure a trade, right? You can select different strikes. And again, we have strikes going up to 10,000 here, correct? There is no order book because those are so far out. This would be almost, we'll ping our market maker and just ask them to add quotes. So if there's anybody on the call who has a BitMEX account and wants to trade those, please, I guess, ping someone at BitMEX, or I can also share my TG handle at the end. Feel free to ping me directly, and then we'll add liquidity. I guess even the most bullish traders of ours will agree it's very unlikely ETH goes to 10,000 by the 28th of June. So I'm sure you could definitely buy that call, but I think it's very likely you'll be wasting money here. So that's why I guess that the strikes and liquidity is kind of sized, and put for the strikes where that's where the market could potentially go. But obviously, if you want to buy $10,000 calls, sure, we can turn on liquidity there. I would say it will be extremely cheap, which is one thing you can see here. As let's start at 3,800, which is slightly higher than where the spot price is now. You can see that the option here is about $270. If I go up to 4,200, the option is already 50% cheaper. And why is that? Because obviously it's less likely. The further away I go from spot, it's less likely that Ethereum actually goes to the price. So that's reflected in the option price. The option should be cheaper, right? You're not going to be paying more money for an option that will, is further away from the spot. So obviously the 5,000 is only $34, which gives you a lot more leverage, like we've seen, than buying something close to the money. So I think it really depends. Obviously, if you're really bullish from right now on ETH price, you're saying, well, 37.50, that's way too cheap. It's going to go very quickly above that. You could look at buying a close to at the money option, a 3,800 call. Will be a bit more pricey, but you'll get immediate bang for your buck, right? In terms of the option value will go up very quickly if ETH pushes higher from here. If you say, well, I think actually end of June, that's a long shot, but I think you could get like above 4,500. So then the option is a lot cheaper, but obviously you need a $700-800 rally here by the 28th of June to really monetize this option. So those are, I think, two ways to think about it, depending really how far you think ETH will move over the next 28 days, 29 days here.
Awesome, thank you. So as a beginner, like for example, I'm really new to options. Are there any tips that we can borrow from you?
Sure. I would say, as we've seen, the minimum size is very small, right? So again, start with 0.1 ETH contracts. Obviously, if you're a pro, then you size whatever you would like to do. And then I would say, don't put, all your account balance. Let's say you have a couple $100. Don't put everything into one strike, because we know that a lot of options expire worthless. So don't go and buy. Let's say you have $100. Don't buy three $5,000 calls. If you have $100 to spend, spread it out across a few expirations, because if the ETH price doesn't go above 5,000, all that money's gone. The money's taken out of your account right away as the premium. So then the market doesn't move there, then you lose all of this. So you can play around with it, right? You can have multiple. You can say, well, I buy a little bit of the 3,800. I want to immediately, see some upside. I want to have a positive P&L. Maybe then say 4,000 is possible, and then maybe 4,200. So you buy those three strikes, 0.1, spend, I don't know what it is, $50, and see. And if we see a sharp rally now over the next couple of days or weeks, those option prices will be worth more, right? So then you should also think about, where do you want to take a profit? Either you say you're going to run this option into expiration, and then as we've seen, it's going to be the settlement price minus the strike price to determine your profit. Or you say, listen, if I make 20% on this option, I'm happy, I'm going to sell it. So one thing, obviously, as we've seen, this functions like a normal order book. So I could actually put myself here on the bid and say, well, I'm going to buy this at 130, right? So I'm going to buy this at 130. So I open an order here, and I'm now in the order book here at 130. So it functions like a normal order book, right? So you could say, if you get hit there, obviously you'll buy the option, and then you can say, well, afterwards, actually, okay, let's say you bought this option here. Then I'm going to put myself on the offer now at 140. I'm going to sell this option. You can toggle here between buy and sell. But 140, I'm going to sell 0.1. So right now, I don't have enough margin in this account because I don't have the position. If I have the position on, then there would be a problem. So those are two ways to do it, depending how confident you are in your view. But I would say watch your option positions. They can move extremely fast, as I pointed out, if there's big market movements. But I think with limit orders, you get an attractive price on the way in, or you can just buy on the offer and then leave a limit order in as a take profit. And maybe another option you let run into expiration, so you see how the expiration cycle works. Obviously, this is still 30 days off. So maybe you are more impatient and you say, well, I actually just want to buy like an option that expires in close to 3 days. So same way it works here. You can come in and you can buy options here, and then you will know very quick whether that's going to make money or not, because the option expires in a few days. So that's another way to do it. Maybe buy a shorter term option. As you can see, these options are a lot cheaper. So if you look at the $4,000 call, they cost $5. If I go to June, the $4,000 call here costs $191. So here you have the advantage: you spend less premium, you get quicker into the expiration. So those are, I think, two ways to think about it. Not sure if we have any other questions. And then afterwards, I'll show you another strategy where actually you can reduce your cost for a trade by doing a 2-leg option strategy.
Yeah. I think, another question is from the user. Can I get liquidated with option?
No, again, good question. So again, if you buy the option and, let's say the 4,000 here, you buy the smallest amount, you can see from your payoff chart, you have a limited risk. So if the market drops a lot, your loss will always be those $90.1, which, as we've seen, will be taken out of your account at the time of the trade. So as opposed to a perp where I enter trade with leverage and my account balance doesn't change, the only thing that changes is my margin usage goes up. Here, in the option market, will take the premium away from your account if you buy an option, but then this is also the maximum you can lose. And on the top of that, what comes into play here is that there's no margin requirement, because we have already decided this is your max loss for the premium that you pay. So you're not going to have any margin usage in this account, right? So if you have $1,000, yeah, you could buy options worth $1,000 and you have no margin requirement, no liquidation and no funding. So I think those are the three things that everyone on the call, if you can remember this as an advantage of options, then I think it will make a lot more sense why you should start looking at options and not just perpetuals.
Okay. Thank you. I think we had enough from the Q&A section. Right now, we're looking forward to hear your thoughts on the strategy and tips.
Yeah, sure. So let's go back to the example that we looked at earlier. And another way to evaluate, I guess, option strategies is to look at something I touched on. It's the risk and reward. Well, first, let's look at, so we said, listen, we'll buy the $4,000 call, right? We'll do 0.1. Now, I'm like, well, this is expensive. It's $20 almost. I don't want to spend that much. So, right, and the reason why this option is more expensive than what I'm going to show you in a minute is because you have unlimited upside. So there has to be a higher price for unlimited upside. But if you say, hey, I actually don't think, Ethereum is going to go above let's say 4,200 or 4,500. So I think that's because we have some flashing in quotes. Maybe I'll take a different expiration. I think the market might be moving a bit. So one thing we can do here is we buy one option. I think this is confusing here. So we'll buy one option, the 4,000 at $19, and then I'm going to sell the 4,500 option here at $76, right? What will happen is that I've now limited my profit to $500, which is the difference between 4,000 and 4,500. Because I buy the option at 4,000, that gave me unlimited upside, and then I'm selling an option, as you can see here. That option then actually has unlimited loss, but because I have another option, the lower strike, it actually offsets the two. So if we go in here, and you can simulate this by looking at a multi-leg, a multi-leg strategy here. Yeah. Now you can see here, I've capped my upside. So above 4,500, I no longer make additional profit. My downside is still the same, but it got reduced. And it got reduced by, 192 minus 76. So it's about $115, as opposed to just buying the 4,000, that would have cost me $192. So what this does, it reduces your cost, which is nice, but it limits your total reward. But maybe it's realistic to say, well, by the end of June, I think ETH will be somewhere between 4,000 and 4,500. And now, how do we determine if this is kind of attractive? Is the maximum payout is, you can see it here, is 4,500, which is, it's 500, the difference between the strikes. And then my cost we saw is about, I think it's about $15, not a price exchange. I think it's $11 now. So now you have a trade that can make you $500 max, and you basically can lose only. I'm just waiting for the price to refresh here. 188 minus whatever the other strike was, so $110. So it's about a 4-to-1 risk reward, right? So you spent $100 to make $500, right? So that is a way, and you can run any combination here. You could say, well, I'll take the 4,100, 4,500. So you can look through that in the order book and kind of work on what is an attractive trade from a risk reward perspective. So here, what would happen is, let's say you buy one option here, you'll spend $112, $113 on this call spread, what they call this trade. If ETH goes to 4,500, yeah, you make $500 on the trade, and obviously you spend 110, so you deduct that, so you make $400 net profit. So this is obviously maybe a long shot, but then again, we've just moved $1,000 in a week or so, right? So you still got like 28 days to run. So maybe it's not that unlikely, and that's why the market is pricing it relatively cheap, I would say, because who pays you 4-to-1x? It's if it was that easy to make the 4, then the price would be a lot higher if you think about it that way. So this is just to summarize. This structure is called call spread. We buy a lower strike, so you always buy the lowest strike first, and then you sell a higher strike. Can be any interval, could be higher up, could be the 5,000, and then you get a nice payoff graph, which is a limited loss here, which is the cost of buying the lowest strike and then sell minus selling the upper strike. Obviously, you receive premium when you sell an option, and when this refreshes, we'll see that there's a gradual increase, which is from the the $4,000 call, as we've seen earlier. But now we don't have unlimited profit potential. We're capping the profit at 4,500, so it becomes a fixed reward to risk trade. Maximum payout is if the market goes to 4,500 or higher.
Got it. Yeah, that's a really good strategy for beginners. I think, because yeah, it's easy to understand.
Yes, and as you can see, I was pointing out, to do one option here, but you can see you could do almost 300 options, So 300, obviously, that's a lot. That's like $35,000 in premium. But if there's any whales or bigger accounts on the call, you can do substantial size here. And if the size on screen is not enough, again, ping us. We can probably do much larger sizes here. We could be talking thousands of ETH options. So the order book is not the full size that's available, but for very big block trades, bigger block trades than what we have in the order books, we'll use the RFQ. As I mentioned, that would be, you would have to ping us one-on-one for the moment, and then we can get you a pricing.
All right, great. Thank you so much for sharing. So we have last question for our QA section, and for this person, the question picked, will get like $50 reward. Please make sure afterwards, after this, please email us or talk to us on Twitter, DM us and leave your ID account, so we will give you the reward. Let me see what question we have right now. Okay. Yeah, we have a Twitter account person called Fastest Fat Man. So his question is, what about selling options? It seems like they're quite expensive. Can I sell them to capture that as cash?
Yes, of course. So we didn't go into those details, but yes. As we saw with buying an option, your premium gets taken out of your account right away. So you could also just say, listen, I want to sell the June 4,500. Now the payoff chart we can see here reverses. Now you have a limited profit, but unlimited loss potential. So what happens here? Let's say you sell an option, you sell this option for $77, let's say. You will get immediately $77 into your account. Now here, you will have margin usage. Here you will have liquidation risk. So that's just to bear in mind. But yes, you can sell this option and you get $77 into your account. So always here, make sure you have enough margin available, because if the ETH price goes up a lot, the margin requirement will go up substantially. Now, what will happen if ETH is at 5,000? You will lose $500 if you sell one option, which is basically, again, the difference between the 5,000 and the 4,500 strike. So it is possible. And yes, if you think, generally we've seen the volatility on ETH really go up to crazy levels, almost 200% in the option market on the day of the approval, or one day before, and now it's reduced substantially. That was for sure today the option, but now I think it's in the 50 to 60 or 70 range. So yes, when you see big vol spikes in the implied volatilities, which is actually that small number, I haven't mentioned that, the small number you can see here, that is actually the implied volatility that's used to price the option. But again, that might be, if that's useful, we can do this on a separate webinar to dive a bit deeper. But yes, the higher the volatility, obviously, I think everybody will agree, the more expensive the option should be, right? So if ETH is moving at 100% annualized, the chance that the option goes in the money is greater than if it moves at 10%. So that's why the higher the volatility, the more expensive the option gets. So yes, you can definitely sell the option. So you can sell it at 77. When would this option make money? Well, if the ETH price would drop, or if the volatility would go down. And then tomorrow the option is worth 70. Well, you can buy it back and make, sold at 77, buy it at 70. So again, you can always buy and sell here. Just with selling options, be careful about the margin, and that you potentially have unlimited loss.
All right. Okay. Thank you so much for sharing. That was really good learning experience. I think for all of our audience, as well as for me as well. I learned how to trade options as a beginner. Thank you so much for sharing all of this. Yeah, and for our lucky draw, I think we have picked the winner. The Twitter account, the Pasta Eater, and as well as the Chief Fatman. Please DM us on our to our official channel. Also, or if you can just leave the message on our comment with your ID, and then we will get contact with you and give you the reward. And also, by the way, right now, We are also doing the one-on-one sections. If you guys interested to explore more, trading strategy, trading skills, or trading mindset, whatever stuff that you want to learn from us, we're more than happy to do one-on-one section with you guys. You guys can just contact us, and then we can connect you with our trading expert so you can learn some trading skills. No financial advice, just for trading skills and knowledge sharing.
Yeah, and
Okay.
also you can, if you want, you can ping me on Telegram. It's BERNY Bernie_Blade. So we can maybe we can post it somewhere on Twitter. But yeah, feel free to get in touch. I hope this has helped you to understand options a bit better. I think it's starting with buying options for beginners is the best strategy. If you're bullish, we're focused on calls only. Just in closing, on the right-hand side, obviously there are puts. So this is now, obviously, you want to be bearish Ethereum. You can do the same strategies, just that you're betting on obviously lower price movements by buying lower strikes than where the spot is. But feel free to reach out. There's no silly questions here. Everybody's on a learning experience, and we want to really ensure everybody gets options. It's not that difficult as very often in the media it's portrayed. Obviously, if you sell a lot of options and don't do anything, if the market moves against you, yes, then you can blow up your account. So we want to avoid this at all costs. So the beginners, again, start with buying options. I think buying just a call and buying a call spread is probably the best strategies for now. There's a number of other strategies. So please let us know, how you found the webinar. If there's any topics you want to discuss, DM us or DM BitMEX team, and we can set up another webinar. Maybe we can make this a regular weekly one if it was useful. Thanks, Skylar, as well, for setting this up, and thanks to everyone who was listening in. Have a great day.
Have a great.
Thank you.
Goodbye.
Take care.
Thank
Bye.
you.